What the hell's that mouse? Alrighty, communications. Let's get straightened out here. This is Doc from North America. Good morning, good afternoon, and good evening. And I hear something ringing. So just hold 1 second. Let me go find out why it's ringing in the house. Make sure it's not like a smoke alarm. Here I come. I'm back. Doc here from North America, as I said before. It's been a fun-filled start of the morning. All right, there is Timothy. Hey, Timothy, what's cooking? Let's throw it right up on the screen. Let's see what's going on. Let's see what's going on. Open sesame. And there's Metho. Yo, Metho. Yo, Robin. Yo, everybody. Cool, cool, and more cool. Let's see. There it is right there. Let's open that up. Actually, yeah, okay. Yeah, that's right. I was going to say. And let's just make it the double so you can see it for a few seconds there. And then we'll put that permanent up on the screen for the rest of the webinar. Let's double check the sound, make sure everything is cool over here at the same time. Is that cool? Can we hear me? Oh, you know what? I didn't even sign in yet. Let me go sign in. Let's see, skip that. Oh yes, there we go. There you go. Now, there we go. So, let's kill the sound now. So, sound is good. All right. So, there you go, Metho. You can see that. We can see it in 1 minute right there. Nice little bounce up going on. I guess they're starting to roll over at this point. I don't know. The stock market's been very strong. You can see here, well, we're heading back for those 20s, and it's been in the buy from here all the way to, went into a sell there. Right there, went into a sell. Went back into the buy right there. Right there on the buy. Right there. Went back into the buy right there. And is in the buy all the way to here. Went into the sell right there again. And then it went right back into the buy, then literally in the next one. And we're still in the buy. As much as it's chopping around, it's still in the buy there. Now, let's take that. And what do we do with that? We go like this. I minimize that. Go to, where is that at? Right there. Right there. Shrink it down. Take it right there. Put it up on the screen. Oop. There it is right there. Park it on the side. Bingo, bango, bongo. And there we go. And we'll move this over a little bit more like so. There we go. There we are. Now you'll be able to watch this throughout the webinar. We can roam from, I believe we can go from chart to chart. Let's go put in, let's take a look at the dollar index. There's the dollar. Let's go to the dollar index there and see what the dollar is doing today. The interest rates, everybody's confounded. I love it. It's, not everybody, in the end result is some of the talking heads on the TV are confused why the market is lifting when the Federal Reserve wants a recession. That's got them all. And, you're watching for the buys. Cool. At this point, there's, I want to fall back to, and let me get the dollar index up there too before I get too goofy. There's the dollar index. And you can see the dollar index kind of just, it jumped into a buy. Well, it looked like it jumped into a buy yesterday. I guess we just have to refresh that. Let's see what we can do there about refreshing that. But you have to remember that people are paid to invest, okay? And the funds are paid to invest. Let's take this and just go like that. I think that was yesterday too. I don't think that's today. Is that today? Yeah, that was yesterday. So it went into the buy yesterday. Let's just move that over. And so they're paid to invest. And let me just, the funds, the mutual funds, the retirement funds, blah, blah, blah. I can go on and on. But more than anything else is that there isn't that many places to invest anymore. And so when you look at the Wilshire 5000 stock index, it has 3,500 companies in it. They didn't change the name of it. I've said this many a time. We've seen lots of consolidation over the the method. Those ODTEs, they're to hedge because there's so much capital and there's so many there's so much size in position out there that they can afford to throw 50,000, or in this case, they can afford to throw like $500,000 away on a given trading day to offset their long. They can do that. And still earn money. In other words, what they do is by buying those 1 day and 2 day options, turns their position into a straddle. And so if they have enough gamma and delta, that if the thing takes off on the upside and they bought puts and they lose $2 million on puts for the day or 2 days, they don't care because they've made it on the other side of it. And then they're going to go sell calls against it and lock in some of that profit because their delta has expanded because of the hard delta. In other words, when you buy options, you have a limited risk factor. It's a different story when you sell options naked. Sell options naked, you have liability. It's like being short. And so, the sky's the limit, for how much you can lose. And so, but when you buy options, you have limited risk. And you can buy them and take a hit on $500,000 or $2 million worth of options and not care because the long side that you're protecting or the short side that you're protecting could explode in the other direction, and you lock the money in. And that's what goes on. And that's what people don't appreciate out of the options market. Look at that. They're still in that buy there, Timothy. See that? They're still holding on. It's the just kind of bouncing around. Let's see if they get some strength out of it here in the next the action. This is a 15-minute chart. I think we should have a 1-minute chart up there too. We should do that. We should go like this. A 15-minute right there. There's the 15-minute. And then we could throw a 1-minute underneath that. So that's what's going on really with those short terms. I remember when first hearing about it and when you talked about it that day. As a matter of fact, you kind of woke me up to it because you said you mentioned it. Yeah, and so exactly when you're short options, you're giving a lot of leverage away. You're giving a lot of leverage away. In the beginning, remember, you might sell options, not you personally, but a person selling options short takes in only a net premium. They can't gain anything more than the premium they sold the options for. That's it. But imagine at the same time, they're liable for if the stock goes through the roof or the commodity goes through the roof or the currency goes through the roof or the bonds go through the roof. In other words, they explode. You sold 20% of the delta. That's all you can ever make, and the option represents 100% of the delta. And so if that thing takes off, it's increasing in your risk. I'll say that again. It's increasing of your risk that you took. The risk increases. So in other words, you sold the options naked, and you're thinking, I took this premium in. 99% of all options expire worthless. Blah blah blah. And it's like quantum mechanics. They don't know where, but they know when, or they know when, but they don't know where. And so when you're selling naked options, you're opening the doorway to take on enormous amounts of risk. You don't realize it at the time because you're thinking shallow. You're thinking, not you, just in general. Anybody that sells options naked, they usually get burned in the end. We've seen it. What happened in 2020? That those 5 funds that were selling options naked and selling puts naked short for years took the stock market and flipped it on its head. We went down to 6,000 on the Dow again or something like that, or 12,000, or I don't know, what was it, 12,000 or 15,000? The Dow had dropped 50, 60%. It was because they were short. And so the only way you can cover a short in options is you got to sell short. You don't have a choice. Or, I'm having a sip of my tea, or you end up buying the options back and going bankrupt from it, one or the other, and that's what they did. 3 of the companies went bankrupt. One of them closed down, and I forget what the 5th one did. I think they were the smartest. They closed down before they got in bad trouble. So, but they had made billions of dollars for like 8 years, 10 years. They were selling naked. You know, they said, oh, the Fed is a free put. They give out free puts. The Fed is a free put, so we can sell puts. Yeah, well, all collapsed. Okay, Timothy, let me do this. Let me go and get... Oh, you know what we'll do is just do this. We'll take this. File. Copy. And we'll just put the 1 minute in there, that's all. File. Paste. I don't even have to leave the page. Paste. There it is. Go like that. Move it over to here. Move this one up. Oh. Move that up like that. And then what we're going to do is we will turn that into a 1 minute. 1 minute. And we can just go back 2 days. It'll be fine. There we go. And we can shrink down the screen there so you can see all the chart and not the numbers. But yeah, so what started me off on that, Matho? I kind of forgot what it was. What started me off on talking about the risk? Oh, I know. It was I was rambling. It wasn't you. It was me. So what was really going on in the end result is that interest rate... Oh, what did we do? We lose that already? Let's crank that puppy back up again. Where's the mouse at? Reconnect. There we are. And so what happened was that people were like saying, you know, wow, what's happening here? Why are we seeing, you know, this type of action when the Federal Reserve is trying to shut down the economy? Well, what it really comes down to, now you got a 1 minute down here, Timothy. You can see that went into the cell right there. And, ooh, look at that. The 15 minute is trying to, oh, the 15 minute just did it. Closed into the cell. So now we're in the cell right here. Let's see what happens. And that 1 minute was riding that puppy down for a while. Let's see how they bottom here a little bit, try to turn up, and then head down again. Do the ABC. So that's where we are. We have been generating sell-side liquidity all the way from Asia. Think the red folder dollar... think the red folder dollar news at 10 will be positive, pushing the cable down. Cool. We got data. Interesting. We got data coming out at 10 o'clock. I like that. Thank you for giving me the heads up on that. I've been dancing all over the place today. Hot tea feels good. All right. So, in the end result is that I think we saw our bottom. Let me just go. Let's see what we do here. We'll do it right off of this. We can do it here. We can do it here. But I think we've already seen our bottom. I really do. I think that the bottom, and this is, what is this? This is the dollar index, okay? You can see here it's trying to get into the negative. We got a green and a red there. Over here on J4X, you see the same situation going on. It is, I'm not sure why that line's in there, but why did that line, why do we have that line? Let's do the hinkies. Maybe that'll take that out. There we go. I'm not sure why I have a line in there this morning. Edit, hide. No, I don't want to hide that. I want to hide the line. Let's dismiss that. Anyway, the end result is that the dollar index is still trying to lift up. And as you can see, behind that little line, you can see it's a little red there today. And let's put the hinky back in there again. It emphasizes it clearer. Well, in this case here, the hinky is green. And at the same time, you can see we're down at the bottom, or where we're heading. We're in the middle of the range at the moment with the fast and slow stochastic. And then over here on Chicago is that. Now, Where was I going? I was going to I think the stock market is bottomed. I think it's the October bottom. And I think that the reason why is that the Fed is following lagging indicators. And I think that a lot of these talking heads in the media are not appreciating that fact. And we can take a look at it right over here real quick. And that is that where's it at? Let's take a look at, where is it at? Let's look at the S&P 500 right there. So I think the low was the October low. Back in here, right there. And you can see how far up we are. You can see the ABC or the choppy action we get out of it. And even like a lot of traders are thinking that the sell-off at best could do is the 3,800. It's not going to go after 35. There's like Morgan Stanley and Goldman Sachs keep on coming out with ideas like, you're going to see 3,300 or something like that. They're going to take out that low. I see no reason for it because there's no inventory. In other words, there's as much as you would think there isn't. In other words, once you buy a stock and you're a fund and you have like 5 million shares of it, to buy another 5 million shares is very hard to do. The best thing you can do, the smartest thing they could do the things that Metho is talking about. Do those short-term options. Sell them against it for the day. You can generate income from that. If you're bearish, sell the calls. Trust me, somebody will buy them. You sell them at the right price, they will buy them. I discovered that the 5 and the 13 moving average crossover, it moves similar with your math. We'll be using it as a signal. Okay, why don't we try putting that in there? What did you say it was? The 5 and 13. Let's put it up on the 1 minute, or are you doing it on the 15 minute, or both? Let's see if I can put one in. Let's put it on the short term. Indicator. Add. Yeah, so a lot of that short term option going on. Remember, for every buyer there's a seller. For every seller there's a buyer. You give somebody an opportunity at the right price, they'll buy calls for the day. They'll split that order up in 10 ways. So the fund itself sells, 50,000 calls or 500,000 calls. And there'll be 10 different companies, market making operations that'll buy it. And they'll trade it for the day. They'll use it to trade with. Cheap gamma. All right. Let's see. So would you say a smooth moving average, was it? SMA? Where was it at? I'll find it in a second. EMA. Moving average. Let's see. EMA. Let's go to the E's for EMA. There's DMI, expiration. Maybe it's a signal. I don't know. EMA. Maybe it's under the M's for moving average. Let's go to moving averages. That's what I do now with there's a moving average line. Moving average envelope. Is that what it is, maybe? Or exponential moving average? Is that what it is? Exponential? Could it be that, Tim? Let me see when I click on it. See what it does. Let's see. Style, properties. No, it doesn't inputs. Oh yeah, there we go. What's it? What's the length? 5, and the displacement is what? 13. You're saying? Okay. Hey, Robin. There we go. Let's see which one it is. I got the Bollingers on there for the fun of it. So why don't we do this? I'll change the color of the Bollingers. Colors of the Bollingers. Let's make the Bollingers white so we can identify it. I don't care about the red and the other. Let's see. I make that white. Okay, there we are. Now, that's is that it right there? That red line? Just a single line like that? And why is it delayed? Why is it so far back? That can't be it. Exponential? Let me go back to that. Format moving average exponential. Let's remove that. Or let me move this box over. So what input wise? There's 5 and there's 13. Am I supposed to put it in there as a 13 like that? And then put 0 into the displacement? How's that? Okay, there it is. So it's only 1 bar off. I thought it would be 2 moving averages. Let's make it style-wise. Let's make it yellow, like that, and thicker, like so, and get rid of that. There we are. So there it is right there. Does that make sense, Tim? Does that make sense there? I thought you were talking about 2 different moving averages. I like 2 different things. I've been doing that with other products. But anyway, that's where we stand. So when we're trading currencies, they don't have the same problem as stocks because the currency market is way bigger. Stock market's a very small equity market on the world. It really is. You know, in other words, the bond market is the largest market in the world. And then from there, it goes to the currency market. It's the second largest market in the world. And then from there is like, I think the oil market competes with the stock market. 513 exponential. Well, what part is 5 and which is 13 then? Let me just go back to that. There's that. There's the input. There's 13. So you're going with, I did 5 and 13 and it didn't look right at all. So you're saying that the length is what? What is the length? We'll wait for Timothy to come back with that. Yeah, that's where we are when it comes to the markets here. And then let's just go back to here while we're waiting for Timothy. Oh, you add them separately. So you make a 5 and a 13. Okay. So the length, so we're doing a 5 length like that. There's a 5 length. Okay, and then we do another one. We insert another one. Indicator. Add moving average exponential. And we make that one a, what was that? Moving average has a 9. Okay, so then we make that a 13. And we figure the style. And we'll make it red. Something like that. So there it is right there. So it's like an envelope. So when the yellow broke, yeah, I see a breakdown. That's pretty good. We broke down here. It's breaking down there. That's not bad at all. Let's do this. Let me make a copy of this, and we'll turn that 15-minute into that too at the same time. So File, File, Copy Window, File, Paste Window. Okay, and then we'll do that from there. Move that up to here. Delete that. Okay. And turn that into a 15-minute. Let's see. Where's my mouse at again? Oh, okay, right there. 15-minute. There we go. There we are. And so there, what can we do with that? How do we do this? Let's see, that's there. So right there, there's the 15-minute. Let's make that the whole page for a second just to look at it closer. And so you can see here, it jumps across here. Nice. Matter of fact, it doesn't even jump across there. It's bullish from here on. So trading that seemed like a good win. Now it's breaking down here with our sell signal right there. it's trying to do it as we speak. So it's just a 1 bar off. That's not too bad. And that's interesting. It rode, we went into the buy here. We went into the buy right there. No, we went into the buy here just a bar earlier. Bar earlier? Yeah. So here it is still underneath there. Our work went into the buy right there. Remember, right on that one. And then it stayed in the buy. We went into the sell here. Yeah, well, you know what? That moving average is a lot smoother, that's for sure for you. That'll keep you in a trade for a while. So that's interesting. Let's go back and look at it a little bit further back. Let's go back a couple days. Let's see. Let's make it 4 days back. Make it 5 days back. So let's go back 5 days and look and see how that moving average did. Okay, so we start to go into it here. We'll go with it right here. So we're both in a buy. We go into a sell. It does not. And so we're in a sell from here, 2 bars over, I guess you could say. Or no, we went into the sell off of this line. Let's widen this so you can see that. Let's see, go like that, and then go like that. No, not that one. We want this. Where was that? Right. Can we do that? There we go. That's better. Okay, now we make the whole page again. Woo. That's a little wilder. Wonder if I can shrink it down when I go like this. If I go like that, no, it doesn't let me do that. So I got to tighten it up. Let's go back to that point anyway. Maybe it'll be clear. No, that's too wide. Okay, so we have to reset that whole thing. And right there, and right there. There we are. And where are you? Where'd you go? There you are. Let's move that over. And let's move that over. Move that over. And then move this over like so. That's interesting. Which one's this? That's the. Let's go to the 15-minute again. And we'll just expand it this way, like that. There we are. And bring that down a little bit. And then what we can do is we can contract it down. Oop, nope. We want to go like this. And we want to go. There we are. Now, actually we want to spin it and reset the whole thing. There we go. So let's go all the way back a couple days and see how it did. Either way, it looks like a good tool. It can be, it matches up fairly well. I would just a wild guess, it matches up like 70%, something like that. We're about a bar ahead. That's about all. That's not bad. Let's put it this way. I always say this over and over again. Something is better than nothing. So you can see here, we break here. We go into the sell here. 3 bars later, we go into sell here. We go off of this line. We go into sell 2 bars later. Okay, right there. And so off of this line, it goes into a sell. There's right there. We're in a sell at that point. It's not. It is. So 3 bars later or 45 minutes later, it breaks. So it has some, it has some value to it. I guess, let's put it this way. The 1 minute has to be more accurate, obviously, than the 15-minute. That's for sure. Also, reactions after the crossover is key. If we cross and find a rejection candle, then the signal becomes false. I like that. That's a good one. That's like our red and green dots. That's a smart move. So we're gonna leave it up on the screen live for you like that, and we'll be able to watch it. We'll be able to watch both of them like so, and at the same time we can become more in tune about the marketplace. How's that, Timothy? You can watch that. And let's fix the 1 minute for you so you can see it clearer and better. If I can find my mouse. Come on, mouse. Oh, there you are. Let's go do this like that. Is that it? No, that's not it. All right. Bring this over like so. Widen it like so. All right, it doesn't want us to do that. Let's go find it again, the 1 minute. Wait a minute, where's the 1 minute? Attached windows. There we go. Can we widen it now? No. So let's find attached windows again, 1 minute. And we widen it there, like that. There we go. There we go. Then we peg it again and bring it over to here. There we go. Now we're in business. There we go. And you can see your lines. Matter of fact, look how close that is there. Now, for me, Timothy says, also reaction after vice versa. Let's see. Also using the 50 EMA as a mean reversion point, helping the creation of trading range on the 1 minute. Yeah, I bet it does. And you can see here, it jumped across here nicely. We went into the buy, I think right there. I'll tell you in a second. No, this one went into the buy. So we went into the buy 2 bars over from the line right there. So 1, 2. We went into the buy here. Then it missed it here. So 3 bars later, it went into the buy on the 1 minute. That's 3 minutes. That's not bad. You know, you're only 2 minutes behind. My math. That's not bad. Yeah, I mean that's why I show you this, to show you how accurate what you're working with, and that's not bad. All right, we got Timothy taken care of for the moment, and if you got any other questions about the just fire it out. We'll go back to it. I'm just going to go back to my rhythm, and where did we leave off? Oh, we didn't even look at the cable yet. So let's do this. Let's close that, and yes. And then let's open up right there. Let's take a look at the euro and the cable and so forth. The 15-minute is for identifying liquidity sweeps and order blocks. Interesting. That's interesting. They sound like interesting things. Identifying liquidity sweeps. So in other words, liquidity increasing or decreasing, right? And then order blocks, you're looking for some block trades by institutions. Okay. All right. Now for us, we'll go to the euro right there. And you can see the euro couldn't get into the sell because of the red and the green there, and it's popped up again. So we're still in that daily buy. Now we can look at that on J4X real quick and then go right to the cable and look at the daily cable, because it's not exactly doing the same. Okay. I'm not sure why I have this line there. We'll have to figure out how to turn that off. Let's see, what is that? Indicator, chart, drawings, cloud, set price alert, cancel. Just want to turn that off, hide. There, no, did that hide it? No. I don't know how to turn that off. I'll just leave it there. That'll be fine. All right. So liquidity sweeping is stop hunts. What's that mean? Stop hunts. Oh, you mean, are you talking about like false bids and offers? You know, where they pull their bids, like for high speed trading, they pull it out, they put it back in, put it back out again. Is that what you're talking about? You know, in other words, cut out that electronic trading in a sense? The high-speed trading stuff? Let's put cable in here. There's the cable. Now, cable... Yeah, I want to kill that line if I can figure out how to turn that thing off. It seems to be blocking our... Let's see. Place offer? Buy? I don't know. We'll figure out how to turn this thing off over time here. Chart price. Current There we go. Look at that. A blind squirrel can find a nut. That's me. I'm the blind squirrel. It's an old saying on the floor. Never really thought about it until just now. We used to say that even a blind squirrel can find a nut. I can slowly hack my way to some some problem on a chart. Sooner or later, you find it. Yeah. So there you are. You can see the cable. Feeling the pressure here. You can see a couple days of red. Let's put it up over here on Chicago. Right there. Yeah, we went into the red yesterday. It's lifting up more today. We're still in that weekly sell right here. Let's move that line up right there. So we're still in that weekly sell for, what's that? This is the 5th week now. We'll see what they do if they start to bottom in here and start to take off. So liquidity sweep is for high-speed trading, I bet. Let's see what's going on here. It is, we're in a buy here. It's in a buy, so that's cool. It never went into the sell. The weekly, I'm sorry, the 15-minute is getting very close. You can see that. You can see the yellow is 1.199, and the red is 1.9908 versus, oh, they're both 08 at this point. No, one's 04. That's what it is. The red is 104, and the yellow is 108. So the 08 is still high. It's just over by a little bit. That's what that is. All right. From the cable, like I said, I'm not, it's going to close in another weekly sell with no problem. The only half decent thing you can say about it on a bullish side is that you can see that let's make that line a more solid line there. Like that. There we are. And you can see it's just over the manifold, but still on the negative side. So nothing there. Would like to see the green line start to make a turn next week, aiming up. If they're going to start to lift this, that's exactly what will happen. Timothy says, yes, manipulation of highs and lows were, for instance, they sweep a high and drop back down again. Yeah. Well, that's because a lot of technical programs, these AI things, they sell highs, they buy lows, that type of thing. They buy the bounce. They come in, buy, and then they push it right back out the door again. Try to get, it's a more of an electronic market nowadays. Remember, something like 80% of the trading desks that were working in 2008 are gone now. They don't exist anymore. It's like 80%. The central banks have shut down a lot of proprietary trading in banks and brokerages. Sometimes leaving displacements in balances where they come back to find a fair value. Well, that's natural. Yeah, because you have I can use like England as a perfect example. The cable in particular. Rolls-Royce produces jet plane engines, and someone wants they need to buy some engines, and so then I think Boeing sometimes gives you a choice between Pratt and Whitney engines or Rolls-Royce engines, and so then you go buy those things. You got to have British pounds to pay for them. So then you got a block desk trying to fulfill the order. They've got to transfer whatever currency it is. Let's say it's a Saudi Arabian company that's buying the airplanes to begin with, and they want Rolls-Royce engines instead of Pratt and Whitney's. So they're buying the Boeing planes. The Boeing planes are being built, and they go, okay, we want Rolls-Royce engines in them. Okay, good. So then they have to take the Saudi currency, turn it into a British pound, and then they buy it and ship it to the States, to wherever they're building the airplane, and they put Rolls-Royce engines in. So there are times where currencies are actually used as barter itself besides trading. So that opens the doorway for as you say, finding a fair value. Because it has staying power. Once they buy those things, those assets are going to stay there. You know, those Rolls-Royce engines are staying on the plane. The money that was paid for it is going to be there to, you know, as long as it exists, because it's physically something. It's not somebody just out trading and, you know, 5 hours later or 5 minutes later they decide to sell it again. All right, from there we go to the Swiss. You can see the Swiss trying to break down again into that sell. It's right there, and you can see the weekly is doing a lot of dancing, isn't it? Right there. It's still in that weekly buy. So they're trying to break down. It's been in that long buy. Every time we, like here, it had a green and a red, so it couldn't get into the sell. Today it's trying to get in there. We'll see. The Bollinger Band, it's hitting the top end of the Bollinger Band. You can see our work. You know, we've broken the top of our manifold right there, trying to head down. Again, you know, it keeps on bouncing. Whereas we bounce through the manifold, just like the price does. You can see how it gets, as you would say, you know, it becomes... where was it? Fair value, or in this case, it's overbought. It's, you know, notice when we get that high off the manifold, it starts to break down. We get real low off the manifold, you know, between the bottom end of the manifold here and there, and it bounces back up again. So, matter of fact, I guess if you combine the Bollinger Band and us being way down as we turn up, it tells us that the thing is going to start moving on the upside and head for the center of it again. When our math starts to turn, it tells you right there to be long, and, you know, so forth and so on. All right. Then from there we go over to, let's see, there's the Swiss. So let's go to the yen. And the yen kind of trapped up there, just like the Swiss, in a big, long run of buy. And I think it went into the sell here for a day and then went right back into the buy. But it's been pretty much pushing in the same direction for weeks now, since the middle of February. And here we are in March. So, you know, 4 solid weeks of some pushing on the upside from the 131-ish area all the way up to the 137-ish area. And we've been in that weekly buy. As a matter of fact, which is interesting, right here, you see that the fast-moving algo jumped across, and once that jumps across and the slow algo gets above the manifold, you're going to see strength. And sure enough, you do. And that's why we're following 2 algos now on the weekly, because we've been researching this off and on since like 2016, and we finally figured out what it's trying to tell us. So then I went back and back tested it, and the last year and a half we've been following it. You've been seeing the last year and a half I've had these little tiny dots, you know, I've been watching it, but not talking about it. Now I'm talking about it because I actually understand what it's trying to tell us now all the time. So in this case here, with the slow algo, it pushes it into the sell, and you see the weakness on some level, you know, make that low there. But at the same time, the fast algo goes, no, not yet. And sure enough, they intersect, and then boy, when they start to both ride the high side above the top of the manifold there, right there, the plus side manifold, all they do is keep on pushing it up. Now, as we talked about a few seconds ago, about on a daily basis, when it gets above the manifold, you're starting to look for a topping action here. You get up this high, notice it's gone sideways since, you know, and it's trying to break down. You're getting some lower lows, but the closes are basically uniformed across. So just like you, Timothy, I'm constantly looking at research and trying to find better tools, better ways of reading the tools to make more money. Hence, that's the objective, not the trade, to make money instead. My tea. My tea. From there we go to Turkish lira. Let's see what they're doing today there. Still holding up firm. You know, I guess the money is slowly dying down on the the foreign money coming in helping out. And I imagine that's what we're seeing there. Here is the 0 line. It's and what's interesting is the fast. Look at this. The fast. Is that in the bars? Let's see how it is. Yeah, let's make that the dashes. There we are. The fast started picking up the problem. This is when the CME happened off the sun. Now, some person could have good calculations. Now, people, a suspicious observer who has a news show every day and sometimes twice a day, they've been predicting earthquakes almost spot on now for 8-9 years. They can predict earthquakes where it's going to hit on Earth in a like a 300 or 400 mile area. They can even get it down even in shorter, 200, 100 mile areas. They're getting really close, and they can predict almost up to like 1-2 hours. In other words, they can say 2 days from now they'll say, okay, it's going to hit Earth around Turkey, around Syria, around Iraq, in 2 days. And 48 hours goes by and it hasn't hit yet, and then 48 hours goes by, it hasn't hit yet, and the next thing you know, maybe 49 hours or 50 hours, boom, it hits. If it doesn't hit before, like at 46 hours, it can do that too. So and they have a book out now explaining how to predict earthquakes. They can predict them pretty clearly. Also, volcano eruptions also, because it's they follow the math off of the sun, off of the corona. Goodness, I've occupied the whole chart today. In short, the 5 EMA and the 13 is so refreshing for entry, confirmation, and exits. I hear you. I got it up on the screen here. I'm able to do both. We're able to look at the technical analysis that you're suggesting, and at the same time, I can talk to you and talk to the rest of the world about the different products. There's no problem with me. I used to be an old floor broker. So I'm used to working orders left and right. Robin was an old floor broker. We're used to multitasking, trust me. We can multitask. No, it's very interesting. You're welcome to ask questions like this. Be my guest. From there's the Turkish lira, like I said. You can see that. Let's see what it looks like on J4X up over here. Right there. So you can see, let's see, go like that a little bit. Just move that in just a little bit, like that right there. You can see that right there. Let's move this over like so. So we can get your thing in there at the same time. There we are. So you can see yours, and you can see ours. You combine the two together. There we are. Like that. There we go. So you can see right here, you can see worst case scenarios, you just see just that. And you can see right there, it's trying to turn. Matter of fact, I don't think it ever dipped underneath. So we went into the sell right here. There we go. We went into the sell right there, and it backed down, it slowed down a little bit, and now it's trying to turn back up. On your 1 minute, you can see that it you see the 1 minute is having no problem at all. It crossed over for a little bit down there. We went into the sell off of this line right there. The 1 minute went, next minute it went into a sell. We were still both in a sell for a couple bars. Then I go back into the buy here. Yours goes back into the buy there on the 1 minute. So trust the 1 minute more obviously than this, without a doubt. Sometimes it can be 3 bars, 3 minutes behind. In this case here, it was 1 minute behind getting into the sell, and it joined in on the buy together. So that's not bad at all. It's a good tool. A very good tool. Let me think now from there. See that what I always say is that my math is like a primer in mathematics. What a primer is, it's a key. And it's a proof. And it shows accuracy. So what happens is that you go find some tools, keep on trying to beat your 513, and we'll put them up on the screen and compare them to my math. That's why I do this webinar. I have no problem. Anybody wanting to challenge my math, be my guest. Because, if someone can find a better tool than my math, I'm going to use it too. So that is the benchmark. Beat my math. I used to call it Algo Wars in the beginning. we used to refer to this webinar as algorithm wars. And that was, a decade ago now. And I was always hoping that other technicians would come in and challenge my work. And then maybe someone would find a better tool than mine, and I would use it too. Use both of them. So there we are. Now let's jump over to the two currencies that we always, look at: the gold and the silver, the gold and the oil. So let's take a look at. Where's it at? Right there. And there is the CAD. You can see that. And the CAD is trying to push into the sell today. It's doing its best, that's for sure, but it's red and green and flat. The weekly is still in the weekly. It doesn't look like it's trying to back off whatsoever. You can see the fast and slow algorithm is, as they would say in English soccer, aircrafting itself. And so that's the action we're seeing in the CAD. Now, let's take a look at oil right there. And you can see the oil is marching up, and CAD should be marching down. And it's trying as we speak, that's what it's trying to do. It's trying to march down. You can see the little curve going on in there. Not the weekly, of course. Then we go over here. Since we've been looking at a lot of different things, let's go right to Brent itself. There's Brent oil, representing the same thing. As it rises, Canadian is trying to go down. It's trying. Let's put it that way. George says payroll numbers at 7:30. Oh, I'll stick around for that. Thank you, George. The stock markets are holding pretty firm. Like I was started off the webinar. A lot of these people on TV this morning are confused why the markets are acting firm. And it's like, because there's no other game in town. Money managers would be better off just selling calls against their long stock than selling their stock out. That's what it comes down to. And I'm trying to think what else, that basically, or buying puts and selling calls, putting collars on. But to get out of those positions gets expensive. When you're trying to move 5 or 10 million shares, and you got to imagine, this is not 1975 anymore. I remember when, was it Fidelity with Peter Lynch, became a $2 billion fund. I mean, that was like enormous, $3 billion fund. Now there's hedge funds out there, dozens and dozens and dozens of them that have hundreds of billions of dollars. So you can only do so much when there's no inventory. No wonder things go flying 5 and 6% on a day. Why they have black pools? Why do they have all these things? Because it's so hard to get into a position. Once you've gotten into the position, you don't want to be the reason why that position goes up. You want the market to take it up. And that's what's really going on there. All right, from there, where did we leave off, folks? So that was CAD. Let's go take a look at the South African Rand. Right there. And the Rand is trying to go down. You can see there's a little curve here going on, but the closes are pretty much unchanged. We're in a sell for 3 days. And it's in that weekly buy still. Now, we do have the fast-moving algorithm breaking the manifold today, but I don't think it's going to get hit that hard. That maybe it's, as we would say in hedge fund world, in the hedge fund industry, we would say it's possibly next week's business. Not today. Doc, silver started rising again. Yeah, I've been sending it out on the weekly chart, on the charts too at night. Let's go over to silver instead of gold. Let's take a look at. Let's put it up on J4X. There is the. Where is it at? Silver's around here somewhere. There it is. There's silver. Yeah, you can see that right there. It's been trying to lift up. No, that's gold. That's gold. Let's put silver in there. And that's why we're seeing South African Rand trying to curve down. Gold is trying to lift up. And let's put, where is it at? Right there. There's silver. So silver, kind of not as strong as gold, but it's trying to perk up. You can see the work here on J4X. And then over here, let's put it up on the screen. There it is right there. It's trying to bottom in here. You can see we've been in a daily buy for 3 days. The weekly is having a lot of problems. You can see here, even the fast-moving algo is not even able to get through the negative side of the manifold. It's still trapped underneath it. So that's not the most exciting thing. And look at the slower moving algo. It's still down, you know, still buried. Now let's take a look at the gold in that same circumstance. You see there, the fast-moving algo is breaking through the negative manifold right now. And we've got a curve going on the slow one. At the same time, we're in a daily buy. I don't know if this is a dead cat bounce or not, but it's not screaming yet. Let's put it that way. You know, and do you buy the next weakness? Not sure yet until I see that weekly try to turn back up. You know, George? All that makes sense to you? Okay. So, and then when we go back to the South African Rand, you can see that it's trying to curve down, coming off of these tops. So it's following, you know, gold is, you know, things are smoothing out, I guess you could say, in South Africa, I guess. The politics thing is, it's distorted the chart. There's no doubt about that. That's why these lines are there. Politics, 500,000 cash. That's got a problem. It's not, it should probably be down in here at this point. You know, it should be probably, the Rand should be like around 17s, low 17s. Cool, George, cool. From there, we go over to, where do we go? Our last currency. We take a look at the Mexican peso. It's still hanging the lows. You know, it keeps on pushing down on like 4-year lows, 5-year lows during the roar of the Trump era. Whoa, look at the British pound over to 120 area. Neat. How about that, Timothy, huh? So that buy has been a good buy on the 1 minute. The 15-minute, you know, is, oh, look at that. You know, so it curved in there. Did it ever really make it underneath there? I can't tell. I don't think it did. Yellow was just a little above, so it never really caught the sell there. But the 1 minute did. You know, the 1 minute was, you know, much more insightful. I don't know if we can move that over. Can we move that over? Yeah. So at least the 1 minute. Did the 1 minute go into a sell? I guess right there. I guess it caught that. Is that like, yeah, it's like something like that. So it tried to break down. At least you had a good idea it was breaking down. Bazaars went into the sell right there. And then it, you know, then it jumped back into the buy and has been in the buy ever since. Look at that. Oh, look at the 1 minute. It's challenging the downside again. Right there as we speak. All right, that's it with the currencies unless someone wants to see something else. Oh, George says the fast weekly algo should help to along with the slow. Yeah, well, I've been watching that. Like I said, I invented it back in 2015-16, right around there, I remember. Then, you know, it was a scaling thing, putting the 3 and 5 together. So that was the first part. Then I played with it for about a year and a half, and it didn't make a lot of sense at the time. You know, I still couldn't figure out what it was doing. So then I parked it, and around 2017-18, I started looking at it again. Again, it didn't really jump out. Something was odd about it. I couldn't figure out exactly what was going on. That was because I had it labeled wrong. I found out just recently in the last 6 months. So what happened was I thought the fast was 5, and I thought the slow was 3, but it's the other way around. And so I went in and looked at the code, and I kept on seeing that there was something there. It didn't logically make sense to me. So then, you know, I watched it for, I guess that was 2018-19. And then 2021, I went back to it again. And I started paying attention to it again. And I could not figure it out. So finally, about 6 months ago, I opened up the code. And I said, this makes sense. It's doing something right. I don't know why it's doing it right. Yeah, let me say that again. I knew it was doing something right. I just didn't know why it was doing it right. Because I kept on thinking, how could the fast lag the slow? I'll say that again, out loud again. How could the fast underperform the slow? And then I went and opened up the code and I said, I got to figure this out. And sure enough, I found out that I was looking at a fast algo outperforming the slow. And once I understood that it was a fast algo, then it made all sense. And then I knew I could trust it. So then I went back and looked at everything I'd looked at for the last couple of years, and I had them on the charts. You can probably go back over a year now and see, last couple of years, you see the little dots in there, the little soft. It was very soft on the chart. I didn't want to, I think Robin asked me about it once, and I said, yeah, it's something I'm working on. I can't figure it out yet, but I'll figure it out. But once I took the code apart again and saw that the code, that the light blue was the fast algo, not the slow algo. I can be really stupid at times, guys and gals. Sometimes, it's like, how did you make that mistake? I don't know. I wrote the code, but I just labeled them wrong. But I knew something was there. I could see something was there. I just couldn't understand the logic of why a slow algo would outperform a fast algo. And that's why I didn't trust it. It's like, this makes no sense. I remember about 7 months ago, I deleted them all off the charts. I just got fed up. I deleted them. I didn't delete the algo. I just deleted them. And I said, I'm going to go take that algorithm apart again and see what the hell's wrong with this thing. And then I went, oh, I labeled it wrong. It's the fast. And I was like, there's the logic. Because I couldn't understand why a fast algorithm wouldn't outperform a slow one. Not being accurate or not, you would have to assume that a fast moving algorithm would have to, change before the slow moves. And here I had the slow changing before the fast did. I kept on thinking, what the hell does that mean? How does that do that? So anyway, it's got to sound funny what I'm talking about, because you're hearing my mind, what I was thinking about it. George says, oh, I'm sorry, maybe payroll not out today. Thought, oh, yeah, right, it's 34. Yeah, nothing. Let's see what the stock markets did. Did they do any moves? I don't think they did any moves. We did see the cable make a little push, though, didn't we? Yeah, the cable, look at that, right on, where's the hour? Here's the hour. Little push up. So, let's check out the, oh yeah, right here, right in front of us. Oh, the stock market really didn't move either. You're right, it's just kind of dead. So I guess it's not payrolls today. What's today? Today's Thursday. No, today's Friday. You're right. No, you're right. There should have been payroll out today. Today's March 3rd. It's the first Friday of the month. You're right. I guess the numbers weren't big. Let's go into, let me go in and take a look at the news. You're right. No one's even talking about it. I'm not even hearing anything about it either. No, you're right. You're dead right. I'd be very surprised if they put it off till next Friday. That'd be like, what, the 10th. Revised second quarter GDP. No, that's not that. Let's see. There we go. Gaslighting conspiracy. No. Key yield curve signal. No. S&P futures rebound to 4,000. Foxconn. No, I don't see anything about it either. So I guess they're going to do it next Friday? That's odd. This labor, the LBI, and Bureau of Labor Statistics and so forth, they're really upside down at this point. They've been very dysfunctional. I'm not sure what's going on there. No, you're right. You're right. You're right. You're right. You're right. It should have been out. I was expecting it out too. Was the number? Maybe the number wasn't anything. They're not talking about it. That's the thing. They're talking about beer drinkers at the moment. So it's past the point. It's 6 minutes past at this point. It's 8:36 here in the States. So, all right, traders. Yeah, I think next Friday. Doc says unemployment numbers next Friday. That's crazy. I guess who knows? The numbers might be really bad. Maybe that's why the markets are going up. Maybe they recognize that. Yeah, I can see that, like hangmen and stuff like that. I hear you there. All right, we're out of here. It's Friday, so it's TGIF. Thank goodness it's Friday. And we will see you all on Monday, on the 6th. 6th? Yeah, the 6th. 456. So, this is Doc from North America. We will catch you all. Everybody have a safe and smart weekend. And happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. And keep it up, Timothy. Keep on hunting stuff. George, keep on asking questions. And Metho, just be you.